Are you willing to lend money to the current Kenyan government? Or rather, are you willing to comfortably invest your money in treasury bonds and treasury bills? The answer to that question might be no. But again, do you have some money deposited in your bank account? Do you have some money deposited somewhere in a money market fund? Then the answers to those questions might again be yes. Now, you can't lend to the government comfortably yourself, but you might be lending to the government indirectly. Here is the story. Welcome to Finance Focus with Andrew, a platform where we engage in conversation that endeavor to enhance our financial literacy. In case you are coming across this channel for the first time, subscribe, turn on the notification bell so that you get notified anytime we get to post a new financial tip. I know majority of Kenyans currently cannot be willing to invest in government securities because they will simply be lending money to the current Kenyan government, and we have a feeling, or we have the thoughts that this government might end up defaulting and not paying our money back. But I'm here to inform you the reality is that your money is being loaned to the government. It is just that you are not enjoying the benefits that you should benefit. Now, the Capital Market Authority released a report of the Collective Investment Scheme for the year 2025. And it is interesting that out of the 596 billion that Kenyans have invested in the different fund managers, 244 billion, that is 41% of that money, was invested in the government securities. That is the treasury bonds and the treasury bills. So your money has been lent to the government, but you are not getting the benefit because you are not the one who has invested that money into the government. Now, they will go and get a 13 or 14%, and they will come feed you with a 7%, but you stand to insist that you cannot trade your money to the government, but someone else is collecting your money and lending it to the government. Now, we have seen the CBK continue dropping the CBR rate. Last week it was dropped from 10% to 9.5%. It means that the bank should also lower the rates at which they are lending loans to their customers. But one of the probable things that is going to happen, the banks are likely to now shift from lending money to their customers and to the general public and go lending that money to the government because they might get better return and still enjoy the lower risk that comes with the treasury bonds and the treasury bills. So the money that you have deposited in your bank account might end up being led to the government, but you will not get even a single part of the interest because your bank account will not earn you any interest, but the money in that bank account is being loaned to the government and getting some interest in return. So it is good to look at the bigger picture. Don't insist that you cannot lend to the government while your money is being lent to the government. It is just that you are not enjoying the benefits because you are not the one lending that money to the government. So take charge. If you can, take that step and buy those treasury bonds, those treasury bonds and get to enjoy the interest yourself.